Assalamualaikum everyone. Our topic today is an interesting one. And this is about the use of the Qardu contract in mobilizing Islamic deposits. As we know that a Qardu or Qard is a loan, and we have the contract of Qardu Hasan, which is a loan without interest. And if this contract of Qard is used to mobilize Islamic deposit, then it has to compete with the interest-bearing deposit that pays interest. And of course, when we look at the prospect of the Qardu contract used in the Islamic bank to attract depositor without paying interest, that would be suicidal for the bank, because nobody will come to place their money with the bank because there is no motivation, there is no incentive to put the money there because the Qardu contract cannot give any additional return, because if they do, then it will implicate riba. So let us see, some of the issue in this particular topic that lead the Islamic bank to offer the tawaruq contract in order to mobilize fixed deposit. Now, if we look at the overall Islamic deposit transaction, we can see that the deposit can be categorized into two types. Number one will be the transaction deposit. And these are the CASA account, the current account, and the saving account. And the current account, as we know, is essentially made for transactional purposes, for withdrawals, for transfers, and so on. And usually current account do not give any returns. Likewise, saving account is also more liquid. It is a liquid account, meaning that we can withdraw anytime we like because there is no interest payment based on maturity. So, but again, because saving account is much less liquid compared to current account, there is some kind of return, but a bit lower than the current fixed deposit account. Let's say about from 0 to 1%. But we can see that the contract applied on the current account and saving account are mainly coming from the Qardu contract. So meaning that this contract is a contract of lending and borrowing, where the bank is the borrowing party and the depositor, the CASA depositors, are the lending party. And this lending and borrowing of deposits are based on Qardu. Which basically define what a deposit is. A deposit is a loan that the depositor gave the bank, and for that matter, of course, for the Islamic contract of Qardu, this particular facility would not provide any kind of return upon entry, meaning that there is no upfront determination of return on the CASA account, except that some kind of hibah or hadiah can be given out upon exit, upon maturity or upon exit. Then some kind of hibah will be announced to essentially incentivize people to put their money in at this saving account. But if this Qardu contracts is applied to the term deposit or the fixed deposit, which is a high cost deposit, because as we know that bank pays higher interest rate on the FD than the CASA account. So the FD deposit can follow the OPR rate, or most banks would pay below OPR rate. So I'm just giving here like 3%. And we can see that this offering of FD based on the contract of deposit will guarantee the depositor fixed income plus capital guarantee. But then we are trying to find out why is it that the Islamic bank is not using Qardu for the FD product offering. Instead, they are using tawaruq. So let us see, for example, so Islamic deposit are actually competing with interest-bearing base deposit for deposit fund. So Islamic banks are competing with conventional bank to, to incentivize people to place their money with their respective bank. And of course, the riba-based deposit, FD, can offer upfront interest and full deposit redemption. So the riba deposits are basically based on a contract of loan or qardu with interest. So the interest given away from this qardu contract is actually riba qardu, that is the riba created from conventional fixed deposit. So the Islamic bank cannot operate based on qardu with interest, because if they do, then this will implicate riba al-qardu, while of course the conventional bank is operating based on interest, so there is no issue for them to pay interest on this deposit placement. So for example, if the placement was made on the 23rd of April, deposit placement of 100 million, and the interest-bearing bank will declare a deposit upfront of 3% per annum, and with a tenure of 1 year, then the interest on the deposit of 100 million will be 3 million. Right? So the 3 million will be 100 million multiplied by the 3% per annum times 1 year, and so the interest income on the deposit will be 3 million. So we can see that the nature of this interest-bearing FD is that upon making placement on the 24th, on the 23rd of April, then automatically we will see that the bank owes the depositor a sum of 103 million redeemable on the 23rd of April next year, right? So meaning that the depositor, upon making placement on the 23rd of April this year, will be able to redeem a sum of 103 million next year, and a sum of the deposit placement 100 million plus the interest income of 3 million. So the interest-bearing FD deposit therefore secured the depositor a sum of 103 million upon making a placement of 100 million on the 23rd of April this year with zero risk. So meaning that the FD depositor will secure that amount of money, or it will secure a deposit appreciation from 100 million to 103 million without taking any risk, right? So this is the issue of morality, or the issue of ethics, where money is generated without taking any risk. But in Islam, the Islamic bank cannot offer this kind of benefit to the depositor, the benefit of upfront profit and capital guarantee from the use of this qardu contract, since the contract of qard in Islam prohibits the bank to give upfront profit, as this constitute riba. This is a very important principle, that the contract of qardu is a contract of loan, and because it cannot gave any increase from the loan, then this Qardu contract can no longer become a business instrument. Because if you want to venture into a business by taking a loan from the Islamic bank, and the Islamic bank cannot charge profit from the Qardu, or the Islamic bank cannot give return from the Qardu deposit, then how would the Islamic bank be able to attract depositors? And how would the Islamic bank be able to make money from the Qardu loan? So Qardu is essentially a social instrument, a social financing instrument, whereby the people who give interest-free loan are those who are benevolent and generous, and there is no demand for return. Of course, in the Islamic bank, in the Islamic contract of loan of Qardu, it requires the borrower, meaning that the bank at the borrower in the deposit market, to return the loan in full. So any loan or Qard we take from our friend, we must pay it in full. It is our responsibility to pay our debt obligation. So Qardu Hasan doesn't mean that the loan will be burned, will be forgiven, unless the lending party will say, okay, never mind, I forgive you the loan, you can take it when it mature. But on contract, if you take a loan from somebody, you have an obligation to pay off the loan in full. Otherwise, it would be a sin in not to pay the loan on purpose. So in a sense that the contract of loan in Islam require the borrower, or that is the bank, we are talking about the deposit market, to return the loan, that is the deposit in full, but it cannot secure the lender, that is the depositor, an upfront income, as this will imply the giving of riba or the taking of riba. So the contract of Qard cannot be used in Islamic fixed deposit. So instead, Islamic bank uses tawaruq contract to secure the lending party, who are the depositor, an upfront profit and a guaranteed deposit placement. So later on, we will look into how this tawaruq deposit is able to secure depositor and upfront profit and a guaranteed deposit placement. Okay, guys, thank you very much for your time. I'll see you again. Assalamu alaikum warahmatullah.